right. Good morning, everybody. TGIF, yeah. We made it through another one. So FOMC next week on Wednesday. And generally when we are approaching an FOMC, the market goes into this sideways chop zone. And we really don't do much on expansions. But this FOMC seems a little different. And I kind of made the call out on that yesterday, that I don't think we're going to go quietly into FOMC. At least we're not going to end this week that way. But it is something that you want to think about for next week, Monday and Tuesday, and then going into Wednesday, because there's options expiration now every single day in the SPX. You can, build out some 1-day irons, 2-day irons, 3-day irons, and you can start them today so that you can avoid the PDT. And plus starting them today gives them a little time to mature. An iron condor is a trade that you sell to open, and if you sell it on Friday, then it can decay over the weekend, like free decay. What's not to love? So something to consider. It's iron condors are not something that we're going to necessarily want to size up with, and put them on really big. But you could layer them, kind of stagger them out a little bit, keep the size cost-wise down so that you don't have a whole lot of risk involved. And just something to think about, right? So as you can see, we have a lot this morning, but nothing this afternoon. So when we get into the afternoon today, we're free and clear for a 0-day. We're going to look at the charts and kind of evaluate the possibility of an expansion this afternoon. Normally, a Friday before FOMC, I would say, no, there's not going to be much expansion today. But again, this isn't a normal situation, so we'll get into it. I didn't see very much from ECB Lagarde speaking. If you scroll back and look, there wasn't really a whole lot in here. So she must not have, rocked the boat too much. I'm not complaining. Seems like FX, finance juice is running a little slow today. Normally we'd have more than this. It just kind of stalls out. Maybe mine is broken. There they are. So Yellen was out chipping her teeth this morning too. Keep your eye on US dollar Japan. They like playing around on Fridays. Oddly enough, a lot of the things that go on in the FX market are, government related. So they happen on the clock, a half hour, and certain days of the week, like on Friday. The last time they intervened in October, it was on a Friday as well. It happened, it kicked off right about 8:30 in the morning and our time, Eastern time. And then it ran until 11:30. So, 3 hours is all it took. Watch the clock. You just can't stress it enough. Well, we'll look back. Maybe they'll have the post that I'm looking for here in a little bit. All right, so 8:30 and then 10 o'clock. And after that, we're good to go. All right, we won't have anything else really to need to focus on. Continue to keep your eye on that Nick Tamaros guy, the Twitter Fed whisperer, because if they have anything to say, they're going to have to leak it because they're in a blackout mode as we get closer into FOMC. As we discussed yesterday in the pre-market, we had that nice reversal. We did kind of overshoot a little bit first on either side, but nice move up off of the lows. Hopefully you guys got to take advantage of that. The volume is really light this morning. I mean, it's not enough to cause me concern, but it is enough to get my attention. When we look at this really light volume down here, and then we add it with a very narrow IB, and we recognize that there's a market maker move this morning, those three things combined say, watch out and heads up. Something's up. Well, let's go back to the econ for a second. Nothing in here is enough to cause fireworks. Generally, normally, typically, none of those would be enough. So here's FX Street. It's set to the Eastern Seaboard. So, New York time frame, East Coast. There's mildly impactful anticipation, but nothing in the deep dark red, right? Nothing that looks like that. So this is a little bit of a concern, right? If we knew something was coming out today like CPI or PPI, and we've seen this really low volume and a very narrow IB and a market maker move, it wouldn't even be a surprise, right? Like, oh, of course, it's CPI day, but we don't have anything. So what's the market waiting on? That should cause you concern. And I don't have an answer, by the way. It's not. It's a rhetorical question because I don't know. They're waiting on something. The really good thing about this approach, the way that I approach getting ready for the day, is I don't have to know what it is. Right? I can spend the next 3 hours hunting all over the place, and I can give some reasonable assumptions on what I think it is. But at the end of the day, I don't have to know what it is. All I have to recognize is that there is something on deck that is causing the market to be concerned, and the market is waiting for an event. That's all I need to know. That's all you need to know. So when you put those three things together, you will be prepared for the idea that a big move potentially is on the table, and a surprise move potentially is on the table, that just out of the blue, this sucker could start running. I can't tell you how valuable that is. I mentioned the IB. The IB is a 1 hour open range. We would call it open range, except that we don't get to choose how long the range is. The initial balance, the IB, is always 1 hour from where we open at 6 over to 7 o'clock. If you were to highlight the highest point and the lowest point in between those two time frames, that would be our initial balance. And generally speaking, if the initial balance is really narrow, it implies that there's still a lot of work left to be done. And if the IB was really wide, it would imply that they've already got their work done for the day, and that it's very likely that we won't continue to expand or go wider than that. So a very narrow IB is a muted market, a lot of compression, and it starts to build a little bit of a draw. We call it a draw because it's drawing you in. It's drawing in traders. You got to think about where's their stops going to go. Shorts and longs are both going to look at this with their jaded eye and decide that it's a long or a short, and they're going to take their trade and put their stop either above or below this. So it draws everybody in. And then what we very likely are going to see past that is a raid into that liquidity before a move is done. Now, since there's this unknown threat that we have, we want to look a little closer at the market maker move. The current 21-day average daily range is 1.6. I'm going to round up. And the market maker move is 0.6. So you add those two together and you're looking at 2.2, right? A little bit of rough math. So a 2.2% move. That's an odd number. If you go back and look at the big moves that we had last year, they weren't 2.2. They were 2%, 2.5%, 3%. It's weird how oddly specific things get. So rather than measuring a 2.2% move, I'd rather measure a 2.5% move and use that as a little bit of a line in the sand. So start with where we opened it last night in the Globex. Thinkorswim will measure it for us. And there is a 2.5% move at 41.65. We'll just kind of knock it down a little bit for easy numbers. 41.65. Now we want to do the same thing in the other direction. From where we opened last night, take it to the downside. Thinkorswim will measure it for you. And we get down to 39.60. I'm going to expand just a little bit for some round number. Well, we'll do 65, 39.65. All right, so now we've got our extremes marked out. Notice where the lower end is. It's very, very close to the January 20. Oh, no, excuse me. That's a new low, new expanded bar. It's January 25. So it's the low of Wednesday. It's not perfect, not right on the penny, but it doesn't need to be. It's that close to a major pivot point. Open, high, low, close. That's the low of the week. It's the low of Wednesday, and it has weight now to it. So it's always good to see when your analysis lines you up with other pivot points, right? Or with other levels, especially when you get to those levels from different means. This helps you to avoid confirmation bias and multi-collinearity situations. For the top side line that we had marked out, it would get us above the December high. Unless I'm missing my mark here. 41.60. Yeah, so it would get us above all of this. Not that really high peak, that extreme day, but all the rest of it. It's an unusual situation to be looking at things as we go into the FOMC and actually be anticipating an expansion. We normally wouldn't do that, but that's the world we live in right now. So right now we've got two peaks overhead worth considering as we come into the open. If we have not yet revisited this high at the 830 econ, look for a test against this Globex high and or a test against yesterday's high and then a dump. Now it doesn't have to stop right on the dot. And in fact, I would not like it if it stopped right on the dot. We want it to overshoot because liquidity is on the other side. So a little bit of an overshoot, a drift into 72 before rolling over and dumping, or a drift into 78, call it 40.80 maybe, before rolling over. If we break out above 40.80, then we'll start to mess with the ADR half at 40.96 and the ADR full 41.28, and then the new line that we got today, 41.65. Now that might seem like a long ways off, and I can't tell you how often I see somebody say, yeah, I heard you mention that, but it just seemed so unrealistic that I ignored it because I thought there's no way we can go there. And then of course we went there. I'm not pulling these levels out of thin air. They have a higher probability than you might imagine, right? It's not too far away. I'm not reaching. And in fact, I'd say I'm being conservative in my estimate because last year we made more 3% moves than we did 2.5% moves, right? So we could have technically added another 0.5%, and that would have shot us up even a little bit more. So something to consider, right? I'm not exaggerating. I don't need to. This market exaggerates enough. All right, we're nearly into a classic shape on the volume profile here. 10-day, 30-minute, we're back at the top. When we're at the bottom, we expect to go to the top. And when we're at the top, we expect to go to the bottom. We started that cycle and we're headed to the downside and flipped over Wednesday and rallied back up again. So we're above the point of control and we have this kind of a classic head and shoulders inverted going on right now. A few things that I have issues with on this inverted head and shoulders. One, it's kind of wide. Two, it's at the top of the range and it's not supposed to be. And in a head and shoulders is a reversal pattern, not a continuation pattern. So inverted, it should be at the bottom. Classic normal head and shoulders should be at the top. So finding it at the top reduces its bias, reduces its power, and reduces our conviction in recognizing the pattern. But I have to say, after having mentioned all of that, the neckline break, if we were to measure this distance right there and plot it to the upside, we want to measure two places, half of this distance to the upside and then the full distance to the upside. Target has been met. So we've already made the 50%. We have not yet made 100%. Just for some rough shot here, I didn't get it spot on perfect. That would be 41.11 cog line. Yeah, you like it. Lines right up with another pivot point. Maybe that was just a coincidence, right? Sure, yeah. So we're above the point of control. If we start heading to the downside, we're going to expect at least a first touch bounce around 40.11 cog line. There is another cog at 40.31, keep in mind. And below that, if we break below 40.11 cog line, there's not much to slow us down. Got a straight shot down to 3,900. Obviously not in one day, right? We're talking about as we go closer into FOMC next week, because this is our range for FOMC. We still have the VPOC from yesterday, and we hit the topside VPOC last night. Awesome how that works, isn't it? It's exactly where we stopped advancing. We no longer need this VPOC. We're done with it. We take it off the table. That line had been on my chart for a long time. Hey, we finally got there. So here on the 5x5, you can see that today's muted narrow range really stands out in relation to these past few days. But it's worth pointing out Sunday night into Monday with that very narrow muted range, and how we started to do that Monday into Tuesday with a very narrow range. Then again on Thursday, and even Tuesday into Wednesday. Here we activated a drip through the kill zone. It's between 2 and 4 in the morning. And here we activated a drip through the kill zone, which started at 2 to 4 in the morning. Now, it doesn't owe us anything. It's been a reasonably decent week. Let's kind of clean this up a little bit. We've managed to hold the line, hold the range. We didn't dump. So here's our week. $41.11, the top of this pivot back here. And we managed to get through everything without just getting trashed. So a lot more expansion than we would have thought about at the start of the week. But after 3 weeks of sitting down here in this lower range and 2 weeks sitting inside of this green candle, we're now expanding beyond that, and we're now challenging the top of this, which this is the zone or the range. If you go back and look at our earlier discussions in the week about what the expectation was for FOMC, is that we would still be in this box as we came into FOMC. And multiple boxes drawn. We're very close to setting a new high up here, getting above this. And if we do that, it's going to be impactful, really important to the market in the bigger picture. I'm not talking today necessarily, but more of swing logic, right? Basic technical analysis 101 kind of stuff. Each one of these was a major pivot, and each one of them was lower than the previous one. So we had a continuous trend, lower highs, lower low, classic, beautiful pivots in wave form measured move, right? The textbook. But right now, we've actually got the start of our very first maybe higher low. And I say maybe because it hasn't played out yet. As far as I'm concerned, it has, and we're done. So this would be, an equal. I don't even want to use this one. So we don't yet have a higher high. We haven't gotten above that yet. But we have our first higher low. So what I'm really looking for between now and after FOMC, say the end of next week, is are we going to get higher than this high, and preferably higher than that August high? Because if we do, that'll be our first higher high out of that trend since January of 2021. The trend is broken, by the way. We're no longer in this downtrend. We're just not in an uptrend. That's what we're looking for. If we happen to set an equal high, 4,200, and then dump it back down, but still keep our higher low, then this area will become the new area that we'll have to get through to get our first higher high. We won't need this one anymore. So just something to think about. All right, the dollar's been holding the range. A little violent, but it's still holding the range, staying above that 1015, kind of a critical level, and staying below 103. So for the dollar to really be impactful right now, it has to expand above 103. If it does, I would expect the S&P to expand below 3,900. Maybe even into 38. But unless we see the dollar get above that 103, I really can't see that we're going to leg down into, one of those old lows, 38, definitely not 37 in the S&P. We just can't get there without that move in the dollar. On the other side of that, there are still some really smart people calling for, 100 in the dollar, maybe even 98, 99. We get into that level, you can expect, say, the S&P to start pushing into 41.5, 4,200. So as long as the dollar sits in this range, you really got to kind of expect the S&P is also going to sit in that range. We get a thorough break in one, should see a break in the other. The VIX, on the other hand, has continued this lower low trending drift. Now, over the last 2 days, we kind of started setting in this bottom. VIX below 19.5 should see a new expansion in the S&P. We might actually get above that 4,100. But if we start retracing in the VIX, and that's really what's more likely, then we're going to expect the S&P to either hold these highs and or begin to head to the downside. The thing is, we still have to consider that the VIX is broke, it's not functioning correctly, and that it's really not registering what our risk is, right? It's certainly not a valuable tool right now to identify risk. US dollar Japan 129.5. If we break below that, it should be the start of the S&P at least holding its own and not selling off. If we get below 129 in US dollar Japan, expect another leg up in the ES, say 41.5. So we really got to see some action here. US dollar China is getting back towards the top of this range. We'll see how that plays out. At the moment, we're in the middle. We're not at the top. We're not at the bottom. Don't diddle in the middle. There's no reason to make an assumption of how US dollar Japan or US dollar China is going to reverberate around the world. Just in these micro ranges, it needs to come up and break through the top or come down and break through the bottom. Then we can anticipate some impact. Same thing with the dollar. We're not at the high. We're not at the low. Don't diddle in the middle. NVIDIA is down $4 this morning. It is back to that wedge that it was making. So the January 23rd big green bar, we're back inside of that in Netflix. That might offer an opportunity if we can actually get through the morning inside that box. I'd like to get below 125, January 25's low. If we can at least get below the open of January 25, that would be a nice credit spread for say 2 or 3 days, right? Looking to net, say, I don't know, 35%. I wouldn't hold on to it long. And it wouldn't necessarily be a directional trade for a downside move. It would more just be a trade that says, I bet you won't come back up out of that box long enough for me to get my credit. Netflix is down as well, but not nearly as much as NVIDIA. And it ties in with the continuation from yesterday, that pullback from where we closed. Watch for Netflix to rally back up again. We're going to be looking for stability here. So the low 157.5-ish, right around in there. We're looking for this to stabilize and then retest for a breakout. Now, cost-wise, or risk-wise, it's an LRE off of the white line. It's a low-risk entry. So, choices and consequences. If you get in before it actually turns and goes up, you would catch the meat of the move because you got in before it actually confirmed that it was going to bounce and go back up. So you get the meat of the move. If you're right, you'll make more money. And if you're wrong, well, the being wrong would be obvious. You could keep your loss small. All good things. The only thing about this strategy is that you will lose more frequently than anybody who actually waited for the bounce and then played the bounce. So you're going to lose more frequently, but you will make more than the person who waited. And your risk is less than the person who waited. Choices and consequences. If you wait for the bounce, you won't lose as often because you waited for it to actually bounce and then joined in afterwards. But you won't make as much money when you're right. And when you're wrong, your risk is greater. So, the potential to lose more is there, right? So again, it always comes down to what kind of trader do you want to be? How good are you at managing your money? And it's only a low risk entry if you actually exit the loser at an appropriate level. If you let it get out of control and it ends up being a big loser, then it wasn't a low risk entry at all. So if you suck at money management, don't do LREs because it's not a low risk entry for you. Meta is also a little weak this morning, but unlike Netflix, it didn't have a red day yesterday. So with Meta, the big green bar of yesterday is going to be our bar of control. We're looking for it to break out of that bar and head to the upside. That's the only play I want. If this thing starts to get weak, it would need to come all the way down and break below yesterday's low and then challenge that 140 half area. And I just don't see it getting that weak and that nasty today. Baba's got a market maker move. So does Netflix and NVIDIA. Facebook doesn't have one. For Baba, we're only slightly down about $1, but that $1 that we're down is back inside the range. So just like with NVIDIA, we're back in the box. And the January 23rd candle that I talk about frequently, in all of the other names, it's green. In Baba, it's a red candle. Doesn't matter though, red or green, it is the one under control. So if we're back in the box in Baba, it has to break out again. Now, the fact that it broke out and it came back in, it's not too much of a shock, right? When we broke out of the range with that candle, we came back in, and now we've just retested again. But it is starting to show a bit of a topping pattern, right? We broke out of this range, came back in, then we broke out of that range, and we came back in, and now we broke out of that range, and we came back in. It's getting a lot choppier, a lot harder, less follow through. The easy money's been made, right? I hate the phrase, but I mean that you got to kind of eat it. That's what it's showing. Baidu is basically up while the rest of these are down. The bid and the ask are so wide here that it's almost hard to tell how much it's up without actually going and looking at in the intraday. But compared to the other 4 that we just looked at, Baidu's looking pretty good this morning. We're still focused on this high here at 139.5. And the anticipation is that we might overshoot just a little bit and that we're going to dump back down again. But dump might not be the right word. We could just fade back in again. So watch this for tape speed, right? If you're looking for a short here, if it really starts to pick up and you see, UOA, unusual options activity really start coming in, might have a nice short on Baidu. Otherwise, a breakout and an expansion here could very likely push us right up into that 145 overhead trend line that we can't really see on this chart because we'd have to go to a bigger chart. Microsoft is down from the close. It closed right on the money at 248. Nice expansion breakout. It really needs to hold that expansion breakout. Now, this thing has been ranged, just kind of resting in this pullback for a while, and we finally got the breakout. So it needs to stick. We get back down below 245, and we'll be challenging that lower trend line. This morning, we're at 247, so we're only down $1, but we're still above that 245. Since we're looking for a run into FOMC, it would make perfect sense for Microsoft to fade down, Busby off the 245, rally back up to break above 248 and start challenging 250 and above between now and Wednesday. Apple's down, but only slightly, about 40 cents. So it needs to challenge that 145 this morning and break above that trend line. The fact that it's up at all is kind of impressive. Keep in mind, Apple's got earnings one day after FOMC. So, approach with caution on this, because if you need to manage it, you would be managing and being stuck at that point in a trade going into earnings. It's not necessarily where I'd want to be. If we break above yesterday, we have the opportunity of going to 150 by FOMC. Nice breakout expansion in Tesla yesterday. It's continuing this morning. We're at 162.84 and we closed at 160. So we're up a little bit higher than that. Talk about a market that is overbought. Now, the thing about an overbought market is that does not mean go short. If we looked at an RSI or a stochastics, it would show that we're kind of pegged out across the top. That does not mean shorted. It means that somebody's got their foot down all the way to the floor and you can't push the pedal any lower than the floor. Right? But just because you can't push your pedal down anymore, it doesn't mean that the car can't continue to accelerate and go faster and faster and faster. Even when your speedometer pegs out at like 160, it still doesn't mean the car can't go faster. Just the speedometer can't read it going any faster. So these tools, they can only read so far and then they stop. And none of that says that it's reversing. How far away from the 10-period moving average we are would give us a clue about the overbought, oversold level. So it'd be worth looking at that on Tesla and Apple. Tesla still ranks as the top 10 buy-side names, even after this massive sell-off. So something to keep in mind too, right? It has a massive following. So approach shorts in Tesla with caution. Just like with Microsoft, when you try to short Microsoft, you got to do it in short bursts because it's just so darn strong. All right, nat gas continues to fade out. We're down again in more than 1.75% this morning. And emerging markets is down less, but it's still down. And both of those are ones that we focus on constantly. Nat gas had econ yesterday too. Looking for KWeb. There it is. KWeb is flat, really not getting anything yet. So emerging markets being down, but KWeb not being down. That's not really that normal. I'd look for one of these two to change. Either emerging markets comes back to flat or KWeb begins to expand to the downside. So we're looking at Brent crude here. It failed on this topping pattern to break out, but it hasn't dumped yet, right? And we've got this angled support line down here. Really, 82.5 is still the line in the sand, and we're getting closer to that. So we're going to be looking for that challenge across those highs. Brent crude is the same thing. We challenged this minor pivot from January 23rd, but we still have the high of 23rd to deal with, right? And that's right around $89 in Brent. The one that gets my attention though is that we performed a trend line breakover, right? TRB. An angled trend line has more validity than a straight line across. So watch these two close. If we actually get a breakout and a leg up in these two, it will reverberate through the market. The more likely scenario is that we're going to reject across these highs and fall back down again, maintaining this range or this zone that we've been in now for a while, forever. 83 to the downside, 89 to the upside in Brent, and 83 to the upside, 78 to the downside in WTI. I really don't have any expectations that we're going to break out, but that's the point, right? If we do, it's very likely going to shock the system. Europe's kind of low on the day, lazy daisy. It's not doing much. And, that kind of implies a little bit too. It foretells a little bit what kind of day we could have. Keep in mind, I measured out this really big range, right? We went out 2.5%, but it doesn't owe us that. We measured that because there's a market maker move on deck and we have low volume and we have a very narrow IB and we don't have any reason for that. So we went big and measured out the wide range. But really, we could go into the close today having done nothing, just like Europe did last night. So, it doesn't really owe us a move. And that's something to really keep in mind. We don't have to do anything. You just go into the close with a choppy, grindy, nasty day. So airlines, energy, communications, gold, bonds, nat gas, semiconductors, all of that is down. And the rest is either flat or, yeah, and the rest is flat. There's none are positive. Intel fell 9.4% pre-market after climbing 1.3% yesterday in the previous session. On Thursday, the chip maker reported lower Q4 adjusted earnings and revenue. NVIDIA sympathy slipped 2% pre-market after rising 2.5% on Thursday. And AMD dropped 2.5% pre-market. But Bed Bath and Beyond, BBBY, up 1.2%. So that's a name on the short covering list. It's interesting to see that one up and not a lot of the other KWeb names. Or Bitcoin, because Bitcoin, a lot of Bitcoin names are on that list. Nike got an upgrade to 145 from 125 from a favorable foreign exchange change, increased confidence. Basically, they don't have any reason. They just gave it an upgrade and said, well, because I said so. Yeah, that's nice. That's all you got? Adjusted earnings for Visa, a rise in revenue. They're up 1.5%. Yeah, let's go look at Visa. All right, so Visa's got a classic red to green because of this earnings. Closed down yesterday, 224, up in the pre-market to 227. So we're going to be opening completely outside of yesterday's range. This is a red to green with a gap up, right? So we closed down here. We're looking to open up here, preferably above this yellow trend line. And the idea is, as this perhaps fades a little bit and we get into the open, we want to see it stabilize on that 127 and it needs to hold. And we'll be looking for a nice expansion. 230 isn't out of line. Just keep in mind that since it just had earnings, its options are going to be trash on the front end. And, you know, it would probably benefit you to go out to like March or April, something like that, just to get away from all of the options volatility in the front end. Otherwise, if you're going to try to trade a front end option in Visa, it's very likely going to be trash, right? Maybe jump on the sell side or something. All right, for the SPX, 4100 is still our line in the sand. 38 to 41, just like we talked about on Monday of this week. That is our range into FOMC. If we get above 4,100 between now and Wednesday, I would expect it to, wick through, overshoot a little bit, and then come back in again. There is a pivot at 4,150. It's a gap that needs to be closed. So if we get, beyond, say, 41 and a quarter, we're very likely going to go ahead and just close the gap 4,150. It's a significant gap, by the way, right? It's a big one. We closed way up there, and then we opened it way down here, and we really don't. All right, in 9 minutes, we're going to have some econ come out, really focus on yesterday's high. When we get econ, we can have this violent big candle, right? Up or down, doesn't matter. And that big candle is going to generate a liquidity gap. So the expectation is after we get that candle, at some point through the day, we're going to go back to where the price was at 8:30 to close that gap. You won't necessarily see a gap, right? Because there's candles going to be there, but it's still considered a gap. So, just because you see the candles doesn't mean that there isn't a liquidity gap. And that's what we're going to be focused on, a liquidity gap at the open. We could come into 8:30 and not get any violence at all and not challenge this high of yesterday. If that's the case, and we come into the cash open, look for price to come up and challenge that and get rejected. Just because we overshoot it and punch above it does not mean we're going to rally and run. Now, the thing is, you've seen the measurements that I measured. We've got some really high levels up here. It's important to keep in mind that if we do break out and we start running, that's on the table, 41.65 by the end of the day. So you don't have to jump in as soon as we break out above this level. Let it break out if that's what it's going to do, and prove to hold it. Look for a Busby or any sort of continuation within the ticks, the AD, UVOL, DVOL, market breadth. Look at KRE and NY Fang. Find some way to validate the breakout and then join in the long. There's plenty of room, right? This thing, if it breaks out, it has the capacity to really expand today. You won't get left behind and miss out. And I bring that up because I really got this idea that we're going to wick through, come back in with a fake breakout and dump. It's the phrase is fake breakout, fast failure. Well, if that's on deck, then getting above the high of yesterday, luring everybody in there and then dumping it on their heads is exactly the game. That's the play. All right, so don't try to go long just because we break out. And on the other side of that, don't short it just because we break out. Use those other things that I mentioned. Kind of get some context. Have a little bit of patience. And then take the trade. If we reject and we come back in, we're very likely going to retest the lows of yesterday. So there's plenty of room. You won't get left behind in that play either. So a little bit of patience. Everybody be careful, be safe, have a good weekend. I will see you all next week.